Hello, my dear students, and welcome back. I know exams are just around the corner, and we're going to jump right into a chapter that many of you find a little tricky, the Introduction to Accounting. But don't you worry, we're not just going to read a textbook today. Oh no, we are going on an exciting business adventure.
Now, I know what you might be thinking. The minute you hear the word accounting, you picture these huge, confusing books, right? I hear it all the time. Sir, this is just so boring and so tough. But I'm going to make you a promise. By the end of this session, you'll see it's actually super simple and, you know what, maybe even a little bit fun. Okay, so let's do this. Forget the textbook for just a moment. I want you to imagine that you, yes, you, are starting your very own small business online. Let's say you're designing and selling those really cool custom phone covers, the kind you see all over Instagram Reels. Now, on this adventure, accounting isn't some boring subject. It's going to be your best friend, your guide, your personal GPS to making your business a huge success. So, here's our game plan for today. It's really simple. First, we'll talk about what I call your business report card. Then, we'll see who's actually interested in reading your marks. After that, we'll learn some basic business lingo, the ABCs, really. And finally, we'll do a quick quiz so you feel totally ready for your exam. 4 simple steps. Let's do it. So let's start with part 1. What on earth is accounting? Well, think about it like this. You get a report card from school, right? It shows your marks, how you did in English, math, science. Accounting is pretty much the exact same thing, but it's a report card for your business. It tells you and everybody else how well your business is doing. Are you topping the class, or do you need to study a bit more? Now, of course, your textbook gives this very formal definition. It says accounting is the process of identifying, measuring, recording, and communicating. Whew, that sounds like a mouthful, doesn't it? But really, it's not complicated at all. These are just 4 simple steps to tell the money story of your business. Let me show you. And here they are. I call them the 4 super steps. First, you identify a business transaction. Let's say somebody just bought one of your awesome phone covers online. That's step 1. Second, you measure it. How much did they pay you in rupees? Let's say 500 rupees. Step 2, done. Third, you record it. You just write it down in a notebook or a simple computer file. And fourth, you communicate. At the end of the month, you add everything up and tell everyone, hey, I made a profit. See? Identify, measure, record, communicate. So simple. Okay, so you've created this fantastic report card for your phone cover business. It looks great, but who's actually going to read it? Who cares about your business marks? Well, let's find out. Turns out there are 2 main groups of people. First, you have your internal users. I call them Team You. This is, of course, you, the owner. You need to know if you're making a profit, and maybe any managers you hire later. Then you have the external users, or Team Outside. Think about it. Maybe your parents gave you some money to get started. They are your investors. Or maybe you take a small loan from a bank to buy a better printer. The bank is a creditor. And yep, even the government is interested because they'll need to know your income for taxes. A lot of people are watching. All right, moving on to part 3. Now, to read any report card, you need to understand the language, right? So let's quickly learn the ABCs of accounting. These are the basic words, the business lingo that will make everything else make perfect sense. And trust me, they are super, super easy. First word up, capital. What is capital? It's simply the money you put in from your own pocket to start the business. Maybe it's from your savings or your pocket money. It's that first bit of cash that's full of excitement and energy, your initial Josh fund. Next up, we have assets. Assets are all the valuable things that your business owns, and these things help you earn money. So for your phone cover business, what would that be? Well, your computer that you design on, that's an asset. The scooter you use for deliveries, that's an asset. Even the cash you have in your drawer is an asset. Basically, if you own it and it has value, it's an asset. And just like in the textbook, we can think of assets like a tree. The tree has 2 big branches. One branch is for non-current assets. These are things you'll keep for a long time, like machinery or furniture. The other branch is for current assets, things that change quickly, like your stock of phone covers, the cash you have on hand, or money that customers owe you. Okay, now for the opposite of assets. These are called liabilities. It's a simple idea. If assets are what you own, liabilities are what you owe. It's any money that your business has to pay back to someone else. For example, Maybe you took a small loan from a friend to buy some raw materials. That loan is a liability.
And just like assets, liabilities also come in two types. Think of them like a weight on your business. Non-current liabilities are long-term debts, like a big bank loan you'll pay back over many years. Current liabilities are short-term debts that you need to pay back soon, like the bill from your supplier for the plastic covers. We call those suppliers creditors.
All right, now for the really fun part, revenue. This is the best word. Revenue is the total money that comes into your business when you sell your awesome phone covers. Every single sale you make brings in revenue. The more you sell, the higher your revenue goes. We also just call this sales. But as they say, you have to spend money to make money, right? That's where expenses come in. Expenses are all the costs of running your business. It's the money you have to spend to earn that revenue. Things like buying the materials for the covers, paying your internet bill, or maybe giving a small salary to a friend who helps you with packing. So, this brings us to the most important question of all. How do you find out your final score? How do you know if you've won the game? Well, you calculate your profit. And the formula is the easiest thing in the world. It's simply your total revenue minus your total expenses. So look here. If your revenue was 1,50,000 rupees and your expenses were only 5,000, then your profit, your final winning score, is a fantastic 1,45,000 rupees. Well done! Okay, you've learned all the basics. You know the lingo. Now, let's do a quick exam-style quiz, just to make sure you're feeling confident. Are you ready? Hey, don't worry. Tension nailinika. You've got this.
Okay, question number 1. This is a classic exam question. Which of the following is not a business transaction? Is it A, you bought furniture worth 10,000 rupees for the business? B, you paid salaries of 5,000 rupees? Or C, you paid your brother's school fees from your personal bank account? Think about it for a second.
And the answer is, of course, it's C. Why? Because paying your brother's school fees has absolutely nothing to do with your phone cover business. That's a personal expense. In accounting, we only care about business expenses. Simple, isn't it?
Let's try one more, just to be sure. A customer, let's call him Mr. Ravi. He loves your phone covers and buys a few, but he tells you he'll pay you next week, so he's buying on credit. Now, in your accounting books, what is Mr. Ravi? Is he a creditor, a debtor, or an owner? And the correct answer is B, debtor. Remember, a debtor is someone who has a debt with you. He owes money to your business. You'll get that cash later. A creditor is the opposite. That's someone your business owes money to. Get this right, and it's easy marks in the exam for you.
So let's just quickly wrap everything up with your final exam cheat sheet. This is the one slide to remember. Accounting is just a business report card. The 4 steps are identify, measure, record, and communicate. Assets are what you own, liabilities are what you owe, and the golden formula. Profit is simply revenue minus expenses. That's it. That's the heart of this entire chapter.
And there you have it. You see? Accounting isn't so scary, is it? It's really just the language of business. It's a tool that helps you take your amazing ideas and turn them into something real. So now that you understand the basics, I only have one question left for you. What great idea will you bring to life? All the very best for your exams. I know you are going to do wonderfully.